In the virtual asset market, Lidodao occupies the market through a proprietary technology called Liquid, staking on the Layer 1 infrastructure of the Ethereum ecosystem. As of February 2026, Lidodao maintains an overwhelming No. 1 position, occupying between 24% and 28.5% of the total Ethereum staking market. This is a figure intentionally lowered for decentralization from the previously recorded 32.3% share. Lidodao's total deposited asset size is $18.65 billion based on Steth, which ranks 9th in market capitalization in the entire virtual asset market. Based on actual asset value, it reaches $28.5 billion, and the staking volume is steadily increasing regardless of price volatility. The current price of the Lidodao token is sideways between 0.32 and 0.36, near $0.34. The technical core of Lidodao is a liquid staking token called Steth. Users can receive rewards by safely depositing assets, while continuing other financial activities through Steth, which is a certificate. Lidodao's revenue structure is a method of collecting 10% of the rewards received by users as a fee and distributing them to inventory and node operators. As of the fourth quarter of 2025, Lidodao generated $217.2 million in fee revenue, which is larger than the sum of the revenues of the top 6 competitors. Cumulative revenue since 2021 has exceeded $3.4 billion, and it is evaluated as an example showing the most high-quality cash flow in the Web3 ecosystem. The version 3 upgrade and ST Vault system, officially released on January 30th, 2026, are Lidodao's next-generation weapons. ST Vault is a smart contract that provides individual, non-custodial staking positions to institutional investors. Unlike the existing common pool method, users can directly select node operators and directly set fee conditions or maximum extractable value strategies. This meets the demands of huge capital, such as ETFs and ETPs that value transparency and control of asset management. ST Vault defends against slashing risk through an over-collateralized issuance model and maintains the value stability of Steth. By the end of 2026, Lidodao aims to secure 1 million ETH of new volume through ST Vault. Professional operators such as Kiln recorded performance, 12% higher than the Lido average within ST Vault, proving cases of revenue optimization for institutions. According to the competitive environment analysis, Lidodao's dominance is clear. Major competitor Rocket Pool is recording about $2 billion in deposited assets and a 2.95% annual return. Frax is aggressively increasing its market share through a high annual return of 3.38%. But the gap is large in terms of scale. Coinbase, a centralized exchange, collects a low return of 2.08% and a high fee of 35%, so its competitiveness is lower than Lidodao's 10% fee policy. Lidodao has established a strong network effect by establishing Steth as a key collateral asset. In giant lending protocols, such as Aave, ecosystem expansion is accelerating through combination with RWA. Lido Alliance Partner Stakes Tokens operates a model that provides complex returns. By connecting tokenized stocks, such as NVIDIA or Tesla, with Lido staking infrastructure when deposited, Remora Market is tokenizing real raw materials such as gold, platinum, and palladium and bringing them into the Steth ecosystem. Through cooperation with Mento Labs, the scope of acceptance has been expanded to stablecoins based on emerging market currencies, such as the Nigerian naira and Kenyan shilling, in addition to the US dollar, euro, and Japanese yen. The RWA tokenization market in 2026 is predicted to grow to about $24 billion, and Lidodao has preempted the infrastructure to absorb this liquidity. A total of $60 million will be invested in the Goose 3 program, a strategic milestone for 2026. Specifically, $26.9 million was allocated to core protocol maintenance, and $16.9 million was allocated to growth initiatives. The remaining $16.2 million is a discretionary spending limit. To respond to market changes, Lido Earl, the core goal of Goose 3, is an evolution into a comprehensive asset management platform for DeFi users, restakers, and on-chain inventory managers beyond simple staking. In addition, it plans to maximize system efficiency by introducing a validator market called Valmart to induce node operators to compete transparently based on performance and fees. In terms of risk, legal uncertainty is the biggest variable. In the ruling of the Samuel Ver. Lidodao case in the U.S. District Court for the Northern District of California, the court defined Lidodao as a substantive general partnership organization. Accordingly, investors who hold Lidodao tokens and participate in governance are exposed to the risk of being held personally and infinitely liable for the organization's actions. Large venture capitals such as Paradigm, Andreessen, Horowitz, and Dragonfly have been identified as members of this partnership and are continuing legal battles. The court stated that Lido is an organization by people, not autonomous software, based on the fact that it employs more than 70 employees, makes decisions through voting, and operates funds. This regulatory risk is a factor that hinders large institutions from directly participating in governance. Lidodao introduced a dual governance system to mitigate risk. This is a system that checks the arbitrariness of Lidodao token holders by granting veto power to stETH holders. If 1% of the total staking volume opposes, the proposal is delayed for up to 45 days. And if more than 10% oppose, the rage quit mode is activated, where the proposal is completely frozen. Vitalik Buterin evaluated this model as an important safety device that allows Ethereum users to participate as clear stakeholders. From an investment strategy perspective, Lidodao token economics is facing a major change. A model for sharing protocol revenue beyond a simple governance token is under discussion. In particular, an automatic buyback mechanism called Nest operates when the price of Ethereum exceeds $3,000 and annual sales exceed $40 million and directly buys Lidodao tokens from the market with protocol revenue. This is a structure that directly links the performance of the protocol to the token value. Experts predict that the price of Lidodao tokens could rise from a minimum of 104 to a maximum of 385 in 2026 and suggest the possibility of reaching 3251 in 2030. The current price-to-sales ratio is around 7.3 times, and the analysis that the value is undervalued compared to the quality of revenue is dominant. Financial resilience has also been strengthened. Lidodao is lowering the barrier to entry for node operators and securing validator diversity through the Community Staking Module version 2, increasing the resilience of the Ethereum network. This module realizes decentralization value by limiting the market share to 5% and providing low deposits and high rewards to identified stakers. This move is a strategy for Lidodao to solidify its status as public infrastructure for the Ethereum ecosystem, beyond a simple for-profit organization. Lidodao is an attractive asset for institutions that value asset stability, showing a very stable trend with a volatility score of 6.94 points. The token holder update call scheduled for February 26, 2026 will be an important schedule for finalizing the revenue sharing model and the specific execution plan of the future roadmap. Despite regulatory pressure, Lidodao is defending its territory through technical alternatives, such as T-Vault, Nest, and dual governance. 2026 will be a turning point for Lidodao to move beyond simple middleware and be reborn as a comprehensive financial platform. And whether the revenue-sharing model takes root will be the key to reevaluating market value.